Hello everyone. Welcome to the virtual class of International Financial Reporting Standards. In previous sessions, I have discussed meaning, definition, characteristics, needs, and objectives of IFRS. And today, in this session, I would like to discuss one of the most important topic, and it is all about difference between Indian GAAP GAAP and IFRS. It is one of the most important topic as far as understanding is concerned. Even I am expecting these kind of questions in examination. Now, before understanding difference between Indian GAAP and IFRS, it is necessary for you to know the meaning of GAAP and IFRS. So the first and foremost difference is all about meaning of the abbreviation. IFRS referred to as International Financial Reporting Standards. I stands for international, F for financial, R for reporting, and S for standards. While on the other hand, GAAP is also abbreviation. It is referred to as Indian version of generally accepted accounting principles. G stands for generally, A for accepted, A for accounting, and P for principles. So the very first difference is related to meaning of the abbreviation. In India, we are also following GAAP, generally accepted accounting principles. In fact, we are following Indian version of GAAP. Generally accepted accounting principles are designed in such a way so as different countries may adopt these GAAP and prepare its a version that is fit to the local accounting practices. At present, in India, Indian version of GAAP is working. Same way, now the business is developed across the globe. We are in a need of single accounting language that is applicable to the different countries of the world, and that is why we are also using International Financial Reporting Standards. So remember the first difference between IFRS and Indian GAAP. Let us move to the second point of difference, and the point is developed by whom? If you refer International Financial Reporting Standards, IFRS are developed by International Accounting Standards Board, that is popularly known as IASB, while Indian generally accepted accounting principles are developed by MCA, Ministry of Corporate Affairs in India. So this is the second point of difference, because the authority who have developed IFRS is working at international level, and A common platform is established for the development of IFRS, and these standards or these reporting system is accepted by all the countries. They used to prepare general guidelines for all, and member countries have to follow the guidelines developed by IASB. On the other hand, Indian GAAP are developed by Ministry of Corporate Affairs, Government of India. So need not to say that the Indian GAAP are applicable in India only, and it affects to the Indian companies only. So it is the second point of difference that you can mention as a part of your answer. Let us move to the third point of difference. The third point of difference is adopted by whom? IFRS, International Financial Reporting Standards. So far, companies in more than 120 countries have adopted IFRS, while Indian GAAP is adopted by only Indian companies. So from these particular point of difference, you can be very much clear that span of IFRS is wider than Indian GAAP. Indian GAAP is designed and published by Ministry of Corporate Affairs, Government of India, and it is precisely prepared for the Indian companies only. For foreign companies, it is not necessary or compulsory to follow Indian GAAP. On the other hand, international financial reporting standards are prepared in such a way, and already 120 member countries are there with IFRS. So automatically companies working in more than 120 countries have adopted international financial reporting standards as far as preparation of their accounting and financial reporting is concerned. Let us move to the fourth point of discussion. Fourth point of difference is a disclosure. Here, in IFRS, a company has to disclose a note that its financial statements comply with IFRS. It means in the annual reports of the company, it is compulsory for the company who is adopting IFRS to put a note that the financial statements and reports prepared by the company following the guidelines given in IFRS. While in case of Indian GAAP, if a company is following Indian GAAP, it is presumed that it's comply with it and shows a fair view. It's not fair and fair view. It shows a true and fair view. Just to make it correct. True and fair view about its financial affairs. It means that if you adopt IFRS, it is necessary for you as a company to disclose that Your financial statements are prepared on the guidelines given in IFRS. While if you are following Indian GAAP, GAAP, it is presumed. Presumed means assumed, means to believe that it's a comply with it, means the company is following all the guidelines given in Indian GAAP, and the financial statements showing a true and fair view. Most important term, true and fair view about its financial affairs, means all the informations presented in the financial statements prepared using Indian GAAP is having true and fair view, means with full transparency everything is disclosed. After discussion of fourth point, let us move to the fifth point of difference, and it is about how to adopt it for the first time. When we used to adopt anything for the first time, it is difficult to adopt because we are in need of certain procedure. Now, when you adopt IFRS for the very first time, you are not supposed to worry because we have International Financial Reporting Standards number 1, popularly known as IFRS 1. These IFRS 1 provides clear instructions on how to adopt IFRS for the first time. It means that the guideline is clearly given about how to adopt it for the very first time. Once you adopt it, from the next accounting or subsequent accounting period, it is routine, because once you adopt it properly, for rest of the year the process remains same. In case of Indian GAAP, there is no any instructions on the first time adoption. So you can say, as far as first time adoption is concerned, International Financial Reporting Standards provide you clear-cut guideline, clear-cut instructions on how to adopt it. While if you want to adopt Indian GAAP first time, there is no guideline, there is no instructions on the first time adoption. So it may be possible that a company who is going to adopt Indian GAAP very first time may follow their own point of view or the point of view adopted by the management of the company. In absence of the guidelines or instructions for adoption, there may be some problems during the first time adoption of GAAP by the companies. In case of IFRS, it is very easy to adopt first time, while in case of Indian GAAP, due to the instructions or guidelines for the first time adoption is not given or published, it is a little bit difficult or confusing to adopt it very first time. Let us move to the sixth point of difference. It is all about what financial statements need to be prepared. As we all know, whether it's a matter of IFRS or Indian GAAP, ultimately it is connected with the presentation and preparation of the financial statements. Here, The point of difference is there. In IFRS, the companies following IFRS needs to prepare the statement of financial position and income statement. The statement of financial position is popularly known as a balance sheet. But under IFRS, it is known as statement of financial position and income statement. Income statement is popularly referred to as profit and loss account. While the companies following Indian GAAP needs to prepare the balance sheet, profit and loss account, and a cash flow statement. The companies following IFRS have to prepare two statements. The first one, it is all about statement of financial position, and the second one, it is income statement. But the companies following Indian GAAP have to follow three different statements or accounts. The first, it is a balance sheet. Second, profit and loss account for the period. And the third one is a cash flow statement. The cash flow statement is all about presentation of sources and utilization of the cash. Or you can say we have to present inflow and outflow of the cash. And as per the accounting standards, this cash flow statement is also classified into three different parts. Cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So the companies following Indian GAAP have to prepare these three statements or accounts in order to follow the requirement of the law. After discussion of sixth point of difference, let us move to the seventh point of difference between IFRS and Indian GAAP. It is all about how is revenue shown. Revenue means income. As per IFRS, the revenue is shown at the fair value of the money received or receivable, or you can say received or to be received in future. While if the company is following the guidelines given under Indian GAAP, the money charged for the products or services to the customers and the rewards received by using the resources come under revenue as per Indian GAAP. It means if the company is preparing its account according to the guidelines given in IFRS, they have to consider the revenue at fair value of the money received or to be received. That is amount receivable from the customers in future. While in Indian GAAP, it is a different. According to Indian GAAP, the money charged for the products or services to the customers and the rewards received by using the resources come under revenue. It means as a part of revenue, we are never showing the income receivable. We are always showing the income received from the company. So in this way we have 7 points of difference between International Financial Reporting Standards and Indian GAAP. I hope everybody is clear with the points of differences discussed by me in this session. Keep watching the next sessions. Thank you. God bless you.